Welcome, welcome, welcome. It's Sunday, March the 29th, 2026, and we are going to be going over our weekly outlook for the day traders versus. Hope everybody had a great weekend. I'm going to do a quick run through of some of the key points that I could relate to from the conference that I went to this weekend. And that's how we're going to go ahead and start this session out tonight. Let me go ahead and switch screens. Um, let's go over to screen two and we'll go ahead and get started. Okay. So go ahead and grab a couple, get your pens and paper out, right? I think that it'll be easier for me to kind of just talk through it instead of like bringing up anything on the screen. But first thing I wanted to do was kind of introduce you to the person who headed up the conference. This person he's amazing. His name is Lamar Tyler. He owns what's known as Traffic Sales and Profit, or TSP Mastermind. It's a business of it's a group that he manages that has over 1,000 six, seven, eight-figure entrepreneurs. What they do is they teach people how to grow their business, how to scale their business, and how to eventually make profit. Um, I've known this guy for years. He and his wife they're very good friends of ours. And one one of the things I really like about this group of entrepreneurs is because you get to learn from people who are in the process of doing what you're trying to do. They're already there or they've exceeded it. In particular, there's traders that I know that are in this group. They own a separate day trading group that's similar to the what we have, but they actually charge people for their services. It's known as the Profit Room. So it's good that I see them kind of often and I can kind of bounce ideas off of them. Um, and just get thoughts around, what things that they're doing that are working and what things that they're seeing in the market. So it's good to it's good to kind of see those guys every now and then. Stocks and Stilettos, that's another all female trading group. Um, that is they're also a part of it, and even Dr. Tracy Marks, who we were just listening to, she's also a member of the group as well. And I didn't even know she was in there. I think she recently just joined, and she is a great asset to have to kind of bounce ideas off of. So what I kind of did was I kind of came up with 8 things that I think were that'll apply to what we're doing as key takeaways from what I gathered from my notes and went over from the conference. And like I said, I'm not gonna like I don't have like a slide deck or anything about it, so I'm just gonna kind of go off of it on the top of my head, and go through it from my notes because I'm still kind of going through everything, going through all my notes. It was so many gems and so many nuggets on so many different topics. One topic in particular that I think I just mentioned to you guys about, that came up was managing your taxes. And I think I talked to a couple people about this in my through text and over the phone. And just it was kind of timely because I recently just had to kind of deal with my accounting and got some news that I wasn't thrilled about getting. So this kind of was a great one of the great sessions that I kind of came away with. But the 8 takeaways for us, um, the first thing, execution over everything, right? And we kind of get stuck in the idea that I think that a lot of us are perfectionists, and it just comes with the territory that we need to do everything perfectly. And what what you see in these kind of groups is that there are people that are actually making six, seven, and eight figures and not nowhere is dialed into their craft as you think they would be, right? So it is no shot to anybody, but it's like it's people on a wing and a prayer out here just making six figures, making eight figures, making seven figures. And they don't have all the shiny whistles. They not doing all the documented. They're just doing. The execution is more important than how perfect it comes across, right? So we got to get caught up. We got to remove the idea that we have to be perfect to get in everything done. We got to be in a perfect place to get everything done, because or we have to be around the perfect people in order to get things done. We're never going to be in the perfect place, but we still got to figure out a way to execute. And that's more, even if it means that we have to relabel what execution looks like, right? And that means that maybe, if we can't trade on a certain day, I'm not going to trade, but I'll still look at the charts, right? I'll still mark up what I would have traded, right? And what does that look like on a day when I don't see price doing what I would do or what I would see expected? Or even if I don't mark up the trade, so I don't look at the charts, I'm just doing like a one-liner, like, hey, I didn't trade today, but uh, here's my thought about this. It's still giving you some type of action that moves you closer, that moves the needle, right? You get paid to execute constantly, right? We have to continue to be in that state of execution, right? And that means you're executing on a trade. That means you're executing on marking up your charts. That means you showing up to the charts on time every day. That means that you are uh, attending the calls, the weekly sessions I do on Sunday and on Wednesday, like any of those things count towards your execution, right? If you're consistent in if you're inconsistent, it's not your strategy, it's your execution, because you don't really have anything to gauge off of, right? You can't say a strategy doesn't work. You can't say that you're not good at a strategy. You can't say that you don't know how to trade because you haven't given yourself enough consistent execution to know what works and what doesn't work. Okay? So that's takeaway one, right? Takeaway two, right? Get in the habit of determining what your A plus setup is, right? Whatever you feel the most comfortable trading, whatever you feel like you could do this with your eyes closed, um, and you can do this with your, hands behind your tie, hands behind your back, tie behind your back. Get used to acting on that trade and that trade only. You might have one or two or three different types of setups that you look for, and that's cool too. But get used to the habit of executing on those and keeping those as the trade that you go in and you look for. If you don't see it on the chart, if you don't see it show up for you, you're not trying to take trades, and you're okay with not taking bad trades, even if it doesn't align with, even if you might have one, two, three different categories that you look for to determine what your A plus setup is. If you don't see it, you don't take the trade, right? And be comfortable with taking unnecessary trades, right? Because at the end of the day, two or three good trades a week are better than 20 random trades that don't meet your qualifications, right? Even before that, a lot of us don't even know what our A plus setup is, right? That goes back to number one. You can't find out what your A plus setup is if you're not executing, right? If you're not executing consistently, right? And again, tapping back into number one, execution is you need to execute the process of finding out the data that says that this is your best setup to take, right? So that's number two. Number three, kind of again goes into number three goes back into number two, right? Not trading is also a skill, right? Not trading is something that you have to be comfortable with doing, right? Yes, you got up early in the morning. Yes, you marked up all your charts. Yes, you see price action moving in your direction or not in your direction or moving it how you feel that it should move or it shouldn't move. But if it doesn't meet that criteria, you have to be comfortable with walking away and doing the things that you still need to do in order to consider this day a valuable day, right? Sitting on your hands is a part of trading sometimes, and it's okay that that's the case. Like last week, I only took one trade, and I only took that trade in one of my YOLO accounts, right? I didn't actually trade in the accounts that I want to make the money out of. And for a second last week, and I'll be honest, I was kind of frustrated like all last week. And I'm not gonna lie. Um, I was like really, really hoping that I would make the amount I want to make to take payouts this week, right? I want to take 20K payouts this week. And I thought that I could get it done before this week, right? And I was gonna try to push myself to make that amount of money, but in reality, the setups were just not clear, not there the way that I thought that I wanted them to see and be. So I didn't take the trades. Then I went to the conference, and then that was kind of the end of the week for me. And it took me a couple of days to kind of just take a breath and just be like, all right, it's okay that I didn't make those trades because just as easy as I could have made those and took trades this week, they didn't meet my criteria. So would I actually have made money? Would I have actually put myself further away from my 20K goal, right? So that's how I had to kind of reel myself back in, right? Then step four goes into step three, right? The not trading part is is uh is okay, but journal the decisions, right? Again, journaling the decisions you would have made or you think you would have made or why you didn't trade is just as important as you actually trading, right? Even if you got on the charts and you didn't see something or you had a meeting earlier that day that got in the way of you trading, like that's a part of you not trading. That's a part of you not making poor decisions, right? And you got to take that as a win as well because even if you're not trading, it's typically because the setup or the conditions didn't meet your your requirements for A plus setup. Like Trish just said, a lot of the stuff happened during London and Tokyo and Sydney session, right? Or random times, right? The biggest move last week happened at 7 a.m. on Monday morning, right? There's no way you could have predicted that, right? And for you to respond to that, you would have had to been chasing the market, right? And then the rest of the week, it kind of was sideways up until Wednesday, Thursday, and then we just tanked on Thursday and Friday. So, you know, we'd already did our projections for the week on Monday morning, right? We did our projections that we thought that we were going to do for at least up until Wednesday at 7 a.m. on Monday morning. There's no way we could have saw that. There's no way we could have predicted that or made any effort to take a trade that would have been useful for that, right? So that's a scenario where you have to look at that and just I'm gonna journal this. I need to know what happened for future reference in case something like this happens again, right? Winning traders don't just track outcomes, they track their thinking, right? And we need to get into the habit of tracking our thinking just as much as we track our trades because as we track our thinking, it'll help us to kind of note and spot things that we need to consider for, like why didn't you enter? Why did you hesitate? Why did you break your rules? Why did you not why didn't you get in the trade even if you were in a meeting? Like certain little things, like will be important and to understand later on. And you know and the number five is the more we get accustomed to going through these processes for 1 through 4, right? We understand that we have to detach ourselves from the P&L and attach ourselves to the actual process, right? And that's kind of where this is leading to, right? Because if we take only A plus setups, if we don't trade when there's not a trade available, if we journal and we continue to follow that process, the P&L is going to automatically follow, right? We don't even have to think about the amount of money we make because the P&L will just follow along. And I like what they said over the weekend, right? The leading indicator is the things that you can control. The lagging indicator is the thing you have no control over. You see those things after the fact, right? After you put in the work. And that's what these steps are. These steps are the leading indicators, right? I can actually see where I'm making these improvements from, right? I can see every time I execute my A plus setup. I can actually quantify that, right? I can see how many times that I journal in my notes. I can quantify that. I can say yes or no and say I journaled my notes all 7 days for this week, right? I can see myself not taking trades. I can count the number of days that I did not take a trade because of things did not line up the way that I wanted to, right? The and as I'm doing those things consistently, I can see the lagging indicator. Because I did those things and consistently, I made X amount of money. And X amount of money I can expect because if I did everything I was supposed to do over the course of 4 weeks, I can make an expectation that I could potentially make X amount of money. And the more we focus on process over P&L, we actually get to the larger numbers of profit, right? The process is the cause. The the P&L is the results, right? So focus on did I follow the plan and did I execute cleanly, right? Then number 6, you don't need any more information, right? And this might not go for you, Raji, because you're still newer trader, but like Trees and Anna, I'm calling y'all out individually. You both have all the information you need. Both of y'all, right? And I'm tapping you on the head right now with my thumb, on with my finger, my pointer finger. I'm tapping you right now on the head. Y'all have enough information. Y'all know how to trade. You know everything you're supposed to do as a trader. You know what times to trade. You know what setups to take. You know how to mark up your charts. You know how to execute all your order types. You know how to set up a pending order. You know how to set up a market order. You know how to risk properly. You know how to look for order blocks, fair value. Like you got every single thing you need. Both of y'all, right? You don't need more information. Most traders are over informed and under executed. You hear what I'm saying? Repeat that. Let me repeat that. You two both are over informed and under executed. Repeat it one more time. You both, Anna and Trees, are over inform and under execute it. Master one of the models or a couple of the models and just stick with that. Only look for those things. Do the things we mentioned in five, six, 3, 4, and one, and so on, and get the data that you need. You need execution, and execution not it just on trades, but on all of the things that we mentioned before now, right? I'm talking to y'all, but I'm also talking to myself. So don't take it personal, right? Number seven, consistency builds the confidence. That's kind of the issue that I'm seeing with a lot of people in the group, a lot of people who I'm calling out right now. It's just that consistency, right? And you working the muscle, right? You can't expect to go into the gym one day, work out, not go in the gym for 4 days out of the week, and then you get on the scale and you mad at yourself because you ain't lost weight. You psyching yourself out. It's the same way with us trading, right? We can't expect to journal one day, win a trade, then go in and we not winning the trade, and then we just expecting for us to automatically take 20,000 or $1,000 in profit. You can't do that, right? You haven't built the muscle yet, right? So you got to build the muscle. And the more you show up and execute on that, that gives you the consistency to build the confidence, right? The confidence doesn't come from just winning. It comes from the repetition of executing, right? Do the same thing correctly over and over, right? So that's what you, me, all we got to get in the habit of that, right? And then the last thing, number eight, right? The edge that you'll give yourself by doing all of these 8 points, right? The edge comes from the discipline. The strategy gives you the opportunity. The discipline is what lets you capitalize on all of this, right? So the trader who follows the wins the long term, and that's what we're trying to do. We're not really worried about, like, don't get so distracted on what happens on the day-to-day basis, right? I know y'all heard this before, right? Win the minute, what they say, win the second, win the minute, win the hour, win the day. Win the day, win the week, win the month, win the year, right? And that's where we got to get in our head, right? Everything that the way we think down to the seconds, right? The way we react down to the minute is a step taken towards the goal we trying to make, right? So we have to stop getting hung up on and like Dr. Mark said, she said on the when we listened to the video, we have to stop attacking our brains and getting so caught up on making mistakes, right? We're not in a system where making a mistake is going to ruin or kill or destroy anything, right? So we need to stop associating our failures in trading as something that's life threatening, right? The way that they described it over the weekend was there's a failure and a failure, right? A failure means you fell off completely. You have stopped doing everything right, right? You can get no value if you stop completely, right? If you stop completely. When you fail, you actually get something from that. You get the opportunity to learn what not to do. And that's the difference between that. Like, so if we blow up an account, if we take a loss bigger than we thought, go back, get your data that you need, and you learn from it moving forward. That's all you need to do. You don't need to go back in, like she said, you don't need to attack yourself. Like, you don't need to berate yourself or belittle yourself because you made a mistake or you failed that particular day, because it's not about that day. It's about the overall long term, right? It doesn't, whatever you do during the day, if you didn't just get in a car accident and die or something along those lines, you still have the opportunity, right? You still got the means to get up and pursue this goal and any other goal that you're trying to accomplish. You can apply everything that I said to any other goal that you are trying to do. Like it's the execution, right? And just to kind of go over it again, just the high level thing. Execution is over everything. Execution, right? Take the A plus setup. If you don't know what your A plus setup, take the time to figure out what that looks like for you. It might be one, or it might be one or two or three, but try to keep it to like two or three, right? Not actually trading is sometimes a skill because if it doesn't meet, that's number three. If it doesn't meet your requirements, don't trade, right? Then the number four, journal your decisions. Even if you don't trade, decide why, journal why you didn't make that trade or what didn't meet your criteria for you to take the trade, right? Because that's just as important, right? And then number five, right? Detach yourself from the P&L, right? And actually attach yourself to the process, right? The process is the cause, the P&L is the results. Then number six, you don't need more information. Especially for you older cats, like all y'all guys that's been doing this with me, you don't need no more information. You got everything you need. I know I'm a good teacher. I know that. So I know y'all got what y'all need, right? It's more for you guys about mastering those, finding out what your A plus setup is and executing on those, right? Then number seven is consistency builds confidence, right? The more you do steps, the more you take these eight steps, the more you'll get confident in your what you're looking for. And then the last thing, the edge finally is the discipline, right? So I hope y'all got that. I'll go over some more of the notes from the session that I can apply to us. I think the next thing I'm going to go over on Wednesday is a revamped version of the tax process, the tax strategies that we went over in on at the conference, because I think that the more we do in ahead of time will give you the a better outcome later on, right? And you don't it'll take the stress levels down, right? So all right. So with that being said, let me flip over to the let me flip over and then we can get started. So we're going to start over here. All right. So going to three. Okay. So starting with the feds. This week, um, this week, just to note, right? This is again CME Fed rate tool, right? The interest rate, it was around 10% that we might get a rate hike. That dropped. So it's kind of almost saying we're kind of getting a lot of information basically saying that we will likely not get another rate hike and they're going to leave the rate basically the same. So and again, we do have Powell going out um, pretty soon here. I can't remember the exact date, but Jerome Powell goes to Warsh, and he'll be taking over. He's um, he's been known to be more lenient than um, than what Powell is. But honestly, you got to give Powell some credit, man. He's dealt with a lot of crazy stuff over his time in as the Fed chair. So they're we're expecting to lead a rate at 3.75. So that's going to be what we're looking out for, right? Then on the earnings for this week. Again, we have Good Friday. Market is going to be closed. Um, okay, Treese said Powell's going to end term in at on May 15th, 2026. So his term ends May 15th. So and I think he said he'll stay on a little as an advisor to kind of help the transition over into Wars 2. So appreciate that, Trees. Um, we have no earnings release on Friday. Again, we got a holiday on Friday. Nothing really big as far as earnings. So I haven't really had a lot of option plays this year so far. I'm not really I'm not really liking options right now, man. To be totally honest, and I know it's something that I want us all to keep up on, but it's just I'm mostly long on options. I know you can short options too, but I'm mostly long on options because I like to buy and hold those for longer term on option plays. But those my option plays are usually swing plays and they're usually buys, right? But we once you see what the charts looks like, you'll understand like really why there hasn't been a lot of option plays. Um, so only thing that we got that's really standing out to me for the earnings this week is Nike. And Nike can give you kind of a precursor of where retail is. Um, Nike's actually down quite big. I think the last time I traded options on Nike, um, we were at 100 a share, and I think that is definitely off. I think we're down to 60, 50, even worse, right? So last time I traded was last year. Yep, I got some shares around last year. I think I tried to catch this 76 to 90 buy on this. But we are now taking out some yearly lows right now on Nike. And we are at this 52.28 low. Looks like it's about to get taken out. The earnings on Tuesday, they're going to be after hours. The estimated earnings per share is 0.28, so 28 cents. The revenue is 11.3 billion, 11.23. And let's see what the analysts are saying. Let me go back to chart. Um, mm, 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 mm. Over the last week, down 2%. Year to date, it's down 19%. Over the past 6 months, it's down 25%. So this looks like it may the technicals strong sell. Analyst rating. Analysts are actually giving it a buy. Analysts are giving it a buy. So it's hard. It would be kind of hard to take a buy off of this rating. You would definitely need to see some type of structure being formed because once we take out this 52.28 low, this 49 low is next. This low over here is next. This this low at what is that? 47.50. I can see us coming down into this gap right here and or maybe even into this 34 gap. So it's a lot of points where this could be dropping to. So before if this was an option play that you wanted to take for a buy, looking at it from a weekly, monthly, and a daily perspective, um, let's see what the options screener look like. right. So, mm, so these are all the contracts. So if I was going to look at this for a trade, I probably take the May 8th contract. Um, May 8th contract. And looks like where are we at right now? 50, 51, 37 was the close. Maybe we'd see if we could try to come back and take this high, but I would not. Let me see. If they beat and we see price hold, this would have to be the circumstance. We would have to see that we would have to see they beat, and we would have to see a positive response, and we would have to see price hold. It would need to look something like us holding like this and we push up, or something like this and we push up from here. So, and we already said we could go down to that 47 area or even that 36 area, right? So it would need to happen around those price points. But I would need to see that. I like the $54 contract, which means that you would be paying 260 for each contract, right? It's not a lot of volume at this level, but you'll see that volume increase once the earnings release comes out. So I'm not looking at any option plays, but if I was, this would be one that I would look out for. And I would probably let the earnings release and then see how we get a response before I would actually look into taking any longs on this. Um, then we have the economic calendar, right? Let me just refresh this. Okay. For the new guys, this is the website that we use for getting all of the economic release, all the data, all the news that is scheduled for the week. I would go ahead and set up an account with this company, Forex Factory. That's what I use to get all of the calendar release. So this will tell you information about when, the Fed speaking, which is at 10:30 on Monday morning. Powell's going to be speaking. The red folders are the impact, the significance of it. That means that that's something that you really, really want to pay attention to. And it could be a yellow folder too, that or orange folder. The orange folders represent medium. The yellow represents a light, low impact news release. But depending on what's happening, what and what's going on from a geopolitical perspective or from a just situational perspective, what is a yellow folder or orange folder could actually be more important. Like right now, oil, crude oil inventories on Wednesday at 10:30 is listed as a yellow folder. But why is crude oil important right now? And I'm asking for a response. So you can turn off your mic. Turn on your mic. Why is crude oil important?
Because of that, price get changed, futures price get changed, right?
But no,
That's what they fighting over. Huh?
that's exactly it. That's
Okay.
exactly it. That's exactly it. Because with the Strait of Hormuz being closed, that actually affects oil inventories. So even though this is a yellow folder, that's why this is important, right? Okay. Let me see something. Something just happened. Hmm. I just saw the charts just fly up and oil surges 3% as Iran war escalates with Yemen Houthis entering the Middle East conflict. The Houthis in Yemen have just entered, so we'll keep an eye on that. Tuesday, jobs numbers, and consumer confidence at 10. That should do something. At 10 a.m. Nothing at the 8:30 news release on Monday or Tuesday. Um, Wednesday, we got ADP farm, non-farm pay, non-farm employment change. The forecast is 42K. Core retail sales and retail sales at 8:30. So we'll definitely need to watch out for those. Then we got PMI, ISM PMI, on Wednesday at 10. So we might get one move that drives us at 8:30, 8:15, 8:30. Then we may have a secondary move at 10 a.m. candle. So keep that in mind. And then the 10:30 oil inventories might be something else. Then on Thursday, unemployment claims, right? That's going to be the biggest thing. And Challenger job because that'll be out probably like that'll be out at 7:30. Even though it's a yellow folder, and your trade balance, even though that's a yellow folder, that's something you want to pay attention to too. Then on Friday, now interestingly, on Friday, it doesn't show that the market's closed, but the CME calendar show that the markets will be closed at 10 a.m. on 10 a.m. on Friday. So you won't be able to take any trades after 10 on Friday. So the equities, which is what we're trading, and equities, interest rates, metals completely closed on they close on Thursday and they're not opening on Friday. Any forex you might want to trade, equities they close at 8:15 on Friday. So what that looks like is we'll get those numbers that come out. We may or may not be able to trade those, and then the market will close. So just keep that in mind. So if you get in a trade, just get in it, take your profit, go ahead about your business. Don't try to get in and hold anything and try to stay in anything to let it ride. Okay. And then that'll be all the news for the week. Outside of that, we'll just have to keep our eye out on all of the breaking news, which will definitely have all the breaking news come out over throughout the week. Which right now the main headlines are what is going to happen with the war. So we'll just keep an eye out on that. All right, everything makes sense.
Tracking.
Tracking. Okay. All right. Let's get ready to go over to the charts. I got a couple things for y'all today. I'm gonna go ahead and get this get this links set up over here on the on Facebook so we can get all the posts together. All right. So gonna start with dollar. And then before we do that, one thing I wanted to kind of do that I haven't been doing is just show the difference in the change, right? So this was our midweek review, and the expectations was for us to let's open up the initial one, right? So comparing the two, what happened, right? So we're gonna look at this. So this dollar going from this Wednesday, right? The thing was when on Wednesday, when we closed out, we were expecting for price to take out this high and these highs and trade into this previous week. And then there's an order block on the daily, right? Or we trade down, we take out these lows, trade back into this gap, and sell off from here, right? What do? We go up on this one move, we take out this high, and we just kind of stall and slowly chop up above this high. So this pretty much met all of our upside targets on this day for the rest of the week, right? And that's pretty much clear expectations as far as we would get. So going into this week, right? The one I'm still liking us to take out these highs because there's some equal highs over here. We already took out this high just now on the open right here. And then now we coming into that order block right here. So we should be, if we stay bullish, we take out these highs over here, trade into this order block, and then there's the middle of the order block over here from the daily. Let me show you where that is on the daily chart to hide all this stuff. The order block I'm referring to is this last up close candle right here. And we want to extend this low candle out, the opening out to here. And that's where I'm expecting price to come dive into, right? The middle of the order block is right around where we got this high right here. It's roughly right around this area right here. The high is here, and then there's a previous day high or previous month high right here that we should eventually take out, right? On the lower time frames, if we were to sell off, right? If we're going to sell off, we would be taking out these lows that we made over here underneath here. We would eventually trade into this weekly gap right here on the new week opening gap. And there we should get our bounce from there, whether we go through it and bounce on the one or the three. And if we go to the three, there's another one gap over down here as well. So we could get bounces at the one or the three. If not, we go ahead and take out this previous day low. From the upside, after we take out these highs, we move into the order block. That's where we could be setting up sales from. So we likely get a sale from the one or the three, which the three could happen anywhere in between the middle, the low of this order block or the middle of this order block. So, and we know we got our middle lower quadrant, which is probably right around 100.952. And we could see the sell off right at 101 as well. So then if we keep pushing up, we take out that high, trade to the order block high, and maybe we take out the previous month high. So this is what I'm gonna be looking for on dollar, on dollar. And again, we look at dollar so we can know what to do with gold, right? So we don't actually trade dollar. We just want to know like, hey, what's dollar doing? And that'll tell us what we need to do with when we trade gold because they trade the opposite of each other. So whatever dollar's doing, gold is likely doing the opposite. If they not doing the opposite, and they doing something similar, then you don't really want to touch it, right? So drop this in the chat, drop this in my notes. Um, and I'll come back to this. All right. Now we got gold. So if we got gold, we got dollar pushing up. We can already see gold pushing down. There's a fair value gap right here. We got to deal with that. New guys, what's the fair value gap? 3 candles or more series where you got one candle followed by a huge engulfing candle that takes up a big body. Then you got another smaller candle. You want to take the low of that candle, the high of that candle, and you extend it out. You're going to look for trades at the high, the middle, and the low, right? So there's the high of this, the middle, and the low, right? And you can see right now it's already kind of pushing down and looking like it want to bounce off of this, but we'll keep an eye on that for now. Not really interested in it right now at this very moment, but we gonna see. If gold continues to push down, we trade through this, we take out this low. If we keep going after this, we take out this low that we just made here, and then you can see right there is also the yearly opening price at 43.38. So you know what happened when we get to the yearly opening, we are likely to take a bounce off of that, right? So highest probability area if we do sell off is we get a bounce off of this yearly opening price. There's also some lows right here, and there's a 4 hour fair value gap, right? So let me actually move this up. This is highest probability at the one. If we can't get the bounce, we sell off from the two and we get our bounce from three, right? Our three would means this means we took out all of the liquidity and we traded down into this weekly fair value gap. Let me show you where that is on the weekly and daily chart. All right. So on a daily, you can see there's a gap here. I didn't put that on there because I don't think we need it. I think the weekly fair value gap is right here. This is where I think we would try to come back down to right here. Right. So back to then if we cannot bounce off the three, the four comes back up and we either sell off inside of this fair value gap, this 4 hour fair value gap, and then we push down near this yearly low, or we take it out. That makes sense? Tracking? We tracking?
Yep.
Yeah. Okay. All right. So this goal, and let me drop it in here. The VIX is next. Um, all right. VIX. VIX is trending up right now. When VIX starts to get over 30, we are likely to see a lot of moves, a lot of heavier downside moves, right? So you notice that over the past couple days, all the indices been selling off, right? But at the same time, after we made this low on VIX, that's why I love trading VIX. So whatever, so just like write this in your notes. If you don't know this again, I know Anna, I know Treese know this, but Gold moves opposite of dollar, and whatever dollar does, gold should be doing the opposite of it when you're trading, and vice versa. The indices, that's Nasdaq, Dow Jones, and S&P, they move the opposite of VIX, right? So whatever VIX is doing, they should be doing the opposite. If they're doing the same, like let's say if and this goes for gold and this goes for dollar, right? There are certain times when they're gonna go in the same direction, right? But in those circumstances, you just got to ask yourself, what is each of them going to, right? So, like, let's say it was going to some support, right? And everything falling down to support, just like this, falling down to support. If ES, NQ is NAS, Dow Jones, all this, we're all falling down, and VIX was falling down with them, they all came should be coming to some kind of point of interest. Right now, this coming to a price gap. And let's say that the indices came to a fair value gap, right? One of them is going to trade through this, right? So VIX might be coming to the gap, this price gap, and ES and NQ and Dow Jones might be coming to a price gap as well, right? If we see VIX bounce from there, we're likely to see that ES and Q Dow Jones is going to trade through theirs and keep going in the direction. You're going to see VIX bounce off of that and continue in the opposite direction, right? And that's usually what happens in those cases when they are doing the same thing. You just get one of them is coming to the price is trying to get to a certain area, and then it's going to be a reaction by either VIX or one of the indices to continue through whatever that is coming to, whether it's support or resistance. If both of them coming to support at the same time, one of them is going to trade through the support and the other one's going to bounce through it. If both of them coming through resistance at the same time, one of them's going to trade through the resistance and the other one is going to reject from it. Your goal is to be on the side of whichever that you're going to be looking for the trade for, right? If you are going to resistance, you're expecting for the turnaround to happen right there, you're going to be trying to set up for your sell. If you're coming to a support, you want to see if we're going to get the turnaround from the support, and then you be looking for the buy. And also, if you see a high being made on VIX or a dollar, you should be seeing a low made on gold indice and the indices, right? So it works to the opposite, right? Every high I make on the VIX, I should be making lows on S&P, Nasdaq, and Dow Jones. All right. So if you don't have that already, put that in the bank too. All right. So we got highs taken out. We got the previous high from last week. We inside of a gap from March 3rd, and we sitting right at the middle, right? So we are probably gonna go ahead and trade into this daily order block, right? And when we do, we'll probably get a reaction from it, right? Where our 0 to 1 takes us into the order block, and we are already inside of this gap, and we get a reaction to take us, to hold at around the midpoint, or even worst case around the this 30-90 area, right? If we can hold that, the two takes us up through the highs, these previous week highs, and those will be our targets for the upside. We are likely to get a rejection from the 3 or the 1. And since we already seen that the indices push down on the opening, we'll probably gap up on VIX. So once VIX open, which is at 3:15 a.m., we're gonna see a gap on this, and then that'll probably take us from our close at 31.05 to probably somewhere around 33 66 or 35.12, because we'll probably make the 1 or the 3 high, and then it'll be just a retrace, and we're gonna hold at 2 or 4 to go higher. So we already kind of got the idea that we are gonna push up on VIX already, and you'll see on the indices that all of them gapped to the downside when they open up just a few minutes ago. So no consideration for the downside move yet. So I'm just gonna drop VIX. We already know to expect the upside move on VIX already. So let me just go ahead and drop that in here. So we looking for upside on VIX. So we should be, when we open up on VIX, we should already be at the 33.66 or 35.12 area, one of those. And then we're just looking to see if we get the retracement from 3.4 or 1.2. And if we hold at one of those, we go ahead and try to take out the highs we just made and then eventually take out these highs. Let me get my pointer going right quick. These highs right here. And then there's that 35.12, 33.66 area. Because we already know we getting a gap on VIX. Tracking? Tracking. You ain't got to answer. Go
Yeah.
ahead. Cool.
Mhm.
All right. So we got Dow. Let's go weekly real quick. The main area we coming into right now, right? You can see this big order block right here, this down candle right here. This the area we coming into right now. We gap down into it already, right? So we're gonna check the high, which is where we sitting at right now, the middle, which is roughly around here, and then the low, which is roughly around here. We should get a response from each one of these levels, right? And we just need to see where or if we're gonna react from it, right? That's the main area that I'm looking for price to respond to. You can see we at the high. Um, oh, let me go to the weekly. I must have put this fair value gap in here. Oh yeah. I did this before I did the adjustment. Let me get the adjusted. There we go. Okay. So this the adjusted contract. This is that weekly fair value gap I was referring to. So that was with this is with the adjusted prices. So with the adjusted prices, this is the fair value gap we coming into right now. Let me hide this stuff. This wick right here, this wick right here, and the body of this candle right here. You got 3 levels. You got the high, you got the middle, which is roughly around here, and you got the low. And that's where we looking to see if we're gonna get price respond to each or any one of those levels, right? So we already traded to the high, right? So what I'm expecting now that we know that we've already traded to the high of this fair value gap, we should be getting a bounce around here somewhere, probably in between the high and the middle. So that'll put us right around 44.927, right? Then if we do get this bounce, that'll give us the setup for the 2. And if we want to hold this weekly opening gap, that will give us the 2-3 move to get us down to the middle. We can probably see a bounce from the 3 or the 1. I'm thinking the 3 or 1 move where the 1 could actually come down to the middle too and bounce off the middle, but I'm looking at it at least around 44.920 area. If we don't get it, um the other thing I wanted to go over with you guys today, I don't know if I should do it now or I should do it after the fact. Let me think. I think we should just go ahead and do it. The correction levels. So I want you guys to add these to your charts, the correction levels. And right now, on each of the indices, we're already We just entered correction territory. Correction territory is when you make a 10 to 20% drop, right? When you're in bearish territory, that means you drop 20 to 30%, right? So I need you guys to know what these numbers are so you know why we getting certain responses from the market. So I'm gonna go ahead and throw these on there, right? So let me go to the daily. And these correction levels are coming from the all-time highs we made. In this case, on Dow Jones, we made all-time highs at February 10th, 2026 at 50,914. We just did a 10% correction over last week and the week before. The 10% correction was the price that we got to at 45,823. That was a 10% correction. As it stands right now, we've done the 10% correction and we're coming up on roughly about around a 12% correction. The other thing you want to know is our 15% correction. What is that price? That's 43,277, right? That means that if we get down into this order block, that means we would have done a 15% correction. At each one of these levels, price is going to try to buy at some point, right? As we got near the 10% correction of 45,823, what happened with this huge candle? We bought up really, really big, right? Then we came into this fair value gap from the daily and we sold off and we took that low out. So now that we taking this low out, where are we likely to go, right? Where are we likely to go if we taking that low out, right? Down into this fair value gap from the weekly. And then if we are going to do anything between 10 to 20% correction, we got to go and stop at the 15% correction mark. And they've already been projecting that we could likely do 10 to 30% correction, right? And it's due to the war. The longer the war goes on, the more likely we're possibly getting to that 10 to 20% correction. So we know we got some areas we need to consider. So for for Dow Jones, which is this chart, throw this on your chart, right? These are your correction levels. The 10% correction is 45,823. The 15% correction is 43,277. A 20% correction is 4731. A 25% correction is 38,186. And a 30% correction is 35,640, right? And then I want you to look at what's actually at each one of these levels, right? We know we got an order block from the monthly. I think that's the monthly chart. Yeah. We got an order block on the weekly chart that we got at the 15%. At the 20%, we got another order block over here. At the 25%, we got an order block over here. And at 30%, we got a fair value gap and an order block over here. So there's something at each one of those levels. I'm gonna clean off this stuff too, so it'll be a little cleaner over there so you can see it. But there's something at each one of these price points that could flip the market in the opposite direction. And you can see it on the charts, right? And it's basically, all right, you got your 15% here, 20% right around here, 25% right around here, 30% right around here. And it's something that you would expect for price to bounce off of at each one of them levels, right? So keep these on the charts. You don't have to leave them there, but just know that once we get into this, the next level that we need to look out for is 15% correction. And
So
if
the
we
way
keep
you marked it, it's like a from top to bottom. Just put that in measuring missing thing, right? And
Yeah.
10% and then 15, then 20, and then
Yep.
maybe that name. Okay.
So we talking about the price correction from these all-time highs right here. So this is 10, this is 15, this is 20, this is 25, this is 30. If we drop below 30%, something is absolutely wrong, right? We don't need it. We don't want it to drop worse than 20%, right? But it could. But if we drop below 20%, that means we doing stuff that COVID did, right? Because the drop during COVID was like 20-30%. So we don't want to see us drop below that, right? We want to see 20%, worst case 25%, or somewhere in between 20 and 25. Pretty much let's stay over 40K, right? And if we do that, then I think we have done enough to keep a healthy market. But right now, 15% level is our next downside target, right? And then if we get 10%, like right now, we could bounce. We could bounce at anywhere inside of this and get back above the 10%, but we just don't have the catalyst for it right now, right? And I'm gonna show y'all each one of these correction levels on Dow Jones and on NASDAQ. So we doing our downside move. The upside still's a potential. Your 0 to 1, you trade into last week's gap. You also got an order block from the 1 hour, little 1 hour order block, and then you got a 4 hour fair value gap. So you got a lot of things that could keep this from to rejection. So I'm looking for, if we get up in between all of this overlap right here, the order block, the fair value gap, the new week opening gap, I think we reject that one, and we get our new sell down to the downside from there. We could bounce up it if we do sell off at one. We could bounce at this weekly opening gap, but if not, we hold in side. We get the 2-3 move. We take out this high. There's a small fair value gap right here, and there's one right here. We could sell off at the 3. We could get the downside move from there, or we bounce and hold all of this on the 4, and we take out this high right here, and these highs will be at risk, and then we back into another daily fair value gap. So I'm gonna give y'all this chart with the I'm gonna give y'all two versions of this chart. I'm gonna give y'all the regular, and then I'm gonna give you the chart with the levels on there. I'm not gonna take everything off, but I'm just gonna go to the daily and then just throw the correction levels on. And again, this is from the all-time high. So I'm just gonna this from this high right here. And I'm gonna kind of hover over this so you know that we referring to from this all-time high. This is the correction for 10%, 15, 20, 25, 30. This is just for you guys. I'm not going to drop this in the group because they didn't come on the call, so they don't get that. And okay, drop this in the, oops. This is Dow. All right, let's go to NQ. Go to NQ. I'm gonna take these off. So just kind of know once you see we inside of that order block, we pretty much at 15% correction. And you got to start thinking like, all right, cool. Listen out for news that could change the direction of the market, right? Listen out for big swings in the market, right? Big data, you know, a lot of huge response to data, right? Because that's usually when that stuff is gonna happen. It's gonna you will if we're gonna get a positive bounce, it's gonna be at if we're gonna get a reversal in the market to the upside, it's gonna be once we get to one of these levels. The 10, we already broke the 10, the 15% on Dow, or the 20% or the 25% on Dow. It's gonna happen at or around, and that's when we'll start looking at options. Because once we get those turnaround prices, that's basically why I'm marking those because I want to know where is it highest probability that we'll see big money coming back into the market. Okay. The the downside move is in play. We inside of this weekly fair value gap. Let me show you where that looks like on the weekly. We have this fair value gap, wick here, body here, high here. Measuring the high, the low of this candle is the high of the fair value gap. The low of the fair value gap is the high of that candle extended out. Then we got this order block. The order block, we measuring from body open to body close, and we extending it out. This on the weekly. There's another one. If we keep falling off, there's another order block and another fair value gap down here. But I'm not going to put that on there until we get below what we already got to deal with. So then on the daily, you can see we got a fair value gap right here. We may trade back into it at some point, but we already headed towards the downside, right? So let's go back to the 1 hour. We already got down to the downside. Let me go back to the daily and adjust this right quick. Okay, there's our daily gap. And then 1 hour. Okay, so the downside move happening right now, right? So you can see we gap down, we traded to the middle of these gap. That's the low of the day so far, right at the middle. We can still go further on down on this, and it looks like we already rejecting it right now with this long wick right here. So it's looking like we might got a little small 0 1 1 2 move already happening right now. So if we wanted to, we could maybe get a sell out right out of this, but it's not my time of day to trade, right? But the 2 3 takes us below whatever one we make, right? And that right now is this low. And then our 2 3 takes us at below the one we make and further down into the gap. We could get a bounce from the 1 or the 3. And then if we get the bounce from the 3, you can likely get a high probability sell somewhere inside of this fair value gap to take the 4 5 move. And if not, we use this move to take us higher. The upside is not in place right now, even though it's something I think we get a higher move to the upside from the 1 or the 3 if we continue to trade down. But if we do come back in this range, the 0 1 move will take us at or above. We got a lot of overlap like we had before. Fair value gap, order block. The order block is these two candles right here. Body close, body open to body close, extended out. This the last up candle. So you expect for price to come in there. There's a fair value gap on the 4 hour. Over here, there's wick close, wick low, body, wick high, extended out. That's what that looks like right here. So we could push up and sell off anywhere in between this. But if we don't, we take out this high and likely use this little small order block to make a high. The 1-2 retraces, or we sell off from there to continue to the downside. And then if not, we hold and we make the 2-3 move. There's an order block in here. I'm not putting it on there yet. And then there's also a fair value gap. I'm not going to put it in there yet because we are not dealing with that yet. The 3-4 retraces back into this range. It could hold or it could sell off from here. If not, we bounce at 4 or 5 and we take out this high, and then we come into this daily fair value gap and daily new week opening gap from last week. The correction levels on
One question.
yeah.
Like now you are doing this continuous contract
Mm-hmm.
markup, right?
Mm-hmm.
Okay.
Mm-hmm. And you are just clicking this adjusted
Uh-huh.
contract levels. Let's go daily.
Mm.
So you see the difference, right? Look at NASDAQ, right? From the all-time high we made October 30th, 2025, 10% was here, right? Roughly here, right? We are already closing in at 15% correction on NASDAQ. 20% puts us below this weekly order block. 25% puts us down here. We probably got an order block right around here somewhere. And then the low at 30% puts us at, there's an order block here in this range, right? But you can see already that we've already took 10% out and we're closing in on a 15% correction. So so right now, Dow is around 12% correct at a 12% correction, roughly 11 to 12% correction. NASDAQ is almost at 15% correction. Um, and we'll see where ES is. So let me give you this chart. This is already our correction levels. So throw these on the chart. Pay attention to right now our 15% correction. That's the closest number we're at, right? Which means that is probably going to be right around where we get our 3 or our 5 down here at inside of this order block. So the 3, so we are likely to get a bounce at the 15% correction, which could be at this fair value gap low, actually at the 15% price, or we dip below it into the order block and bounce from there. So if we looking for any upside plays, I would wait until we respond to this 15%, especially given the fact that we're almost at this. So we look at where let's look at the lower day. The lower of the day was roughly around 23,096, right? We are 1.13% away from a 15% correction. How many times have we seen price do 1% in a day? Just this past week. Several. No, it's been several, right? So this 1% move is what did we do on let's see, what did we do on Friday? I think Friday we did like 2 or 3%. Let's see, the high to low was here. Friday, we did 3.11%. What did we do Thursday? High to low. Thursday, we did 2.70%, right? So we've been making these 1% moves over the course of the past couple weeks. So for us to be only 1.3, what did we say? From the low that we made today, roughly around here, we are only 1.3%, 1.13% away. That's 261 points on NASDAQ. And we could do that in New York session alone. So keep that in mind. And not, keep these numbers on your chart. I'm gonna probably um leave this on my chart going into the rest of the week because it's really definitely something we got to pay attention to. Let me make sure I got the gap. Yep, gap is good. And did I drop the NASDAQ chart already? No, let me just drop the chart. The same logic on NASDAQ. We making a downside move, and overall I think we come into this fair value gap low or the order block before we see any real upside move. So let me drop this in here. Any questions on this one?
No, I'm good.
Okay. All right. Last one is S&P. And let's go to the daily real quick. And I think we got weekly. You can see where we at. We got this fair value gap from the weekly. That's where we're going to be operating within for this week and going into the rest of the week, rest of the month. You can see we already gapped to the downside and we just made a new yearly low. And you can see 0 to 1 is playing out right now. We'll talk about the upside move. If we do get some upside price action, at this point, it's going to have to come at the 1 or the 3. But if we do make one of those moves, we'll need to analyze where and how we push to the upside and what we could be going to, uh, if we do try to bounce, right? And then if we do push up, is order block, fair value gap, swing high. That's what we got to deal with, right? And then we got to deal with, at this point, we got to deal with new week opening gap too, right? So if we do make 0 to 1, we probably get a high inside of this range. And then we likely sell off from there to get a 1-2 retracement. And the 2-3 happens from there, right? There's a little, we can see price bounce off of this new week opening high, new week opening gap high, right? And then if we do, or we can see it hold inside of this range of the fair value gap and the order block to go higher, right? And if we do get our 2-3, it takes out this high. We probably get a high around just at above when this high gets taken out. And then we get a rejection somewhere around there for this 3-4 move to the downside. And that 3-4 move will likely hold inside of this range that we made. And that 4-5 takes us into this weekly opening gap from a couple weeks before. Let me flip this. And then we likely sell off from there. or we come into the daily fair value gap and we sell off from there and we take out this previous day high. But right now we got the downside move. The downside move is already in play. You can see we got our 0 to 1. We kind of got a 1-2 retracement already. You can see the wick rejecting around there. Then our 2 takes us through the 1. We're getting the right now we got the low is pretty much in the middle of the upper quadrant where we got the high in the middle. If we were to measure that in half, we probably get somewhere around this 6360 level. And that is where we're getting our 1 at. Our 2-3 takes us deeper into this fair value gap where we at least get around the middle. We can see that bounce happen around the middle down to the lower quadrant, which is right around 6306, or you can just round it down to 6300. And then we likely try to get a bounce from there. I think the highest probability is the 3, where we get a bounce from the middle or the lower quadrant, and then we try to bounce higher. But at that point, you see the 4 happening inside of this new week opening gap, or we continue to push higher. If we get it to happen inside of the new week opening gap or inside of the fair value gap, a 4 or 5 takes us below the 3 and down into the low of this fair value gap. And then that's when we can start looking at if we can reach into this weekly order block. Then, as far as the correction levels, right? On the correction levels on ES is right around 10%. Let's go to the daily from the all-time high we made. We made this high January 28th, 2026 at 70.94. 10% is roughly around 10% now. You can see 10% is 63.84. And we kind of hanging out around there right now. So the numbers we want to look at right now is how do we bounce off of this 10% level. Then you can see if we do sell off even lower, we come into this weekly order block, which takes us around the 15% correction level, and which will take us to 60-30 level. Then we got 20% at 56.75. We've seen that Goldman Sachs and a couple of the other big name companies have actually said that they could see us dropping down to 5,300. 5,300. I think that's what was the last forecast was 53 to 5,600. A 20% drop takes us to 56. 25 takes us to roughly around the 53 level. So when we went over that last week, we saw that they were projecting anywhere between 56 and 53 as yearly low price points. And we see that's why they projected that as the yearly low. And we also see where that puts us as far as the correction levels, whether we make a 20 or 25% correction, right? Then if we go to the weekly, you can see at the 20% correction point, there's an order block right there and a fair value gap that you can probably see on the daily. Oops. There's an order block on the weekly. Yeah, that's what we need to consider, that order block on the weekly. At the 15% correction, you can see we got our order block right here that we need to look out for right here. That's where that's coming from. At 25%, this order block and this order block candle over here, that's where that's coming from. 30%, you can see there's an order block and a fair value gap that's sitting right here. So we would be coming back into areas of high probability areas once we get to this 25, 20, 15, 30% levels. So that's kind of why we are looking at that. Let me give you the chart on this correction levels. And again, that's from the all-time high. Put these levels on your chart. Right. And then we'll just go ahead and drop the charts for the start of the week. The upside, same as before. We got a clustered stack of PDs, PD arrays, order block, fair value gap, swing high. If we push up, we likely reject in there. If we don't, we hold and go higher. We got a little order block. Once we take out this, or we trade into the new week opening gap from last week, and then we got a previous day high liquidity, and we got the daily fair value gap. So that's the upside. We have a high probability to sell off at the one and the three, but I like the one on this, especially with us. When I see us push down hard, the upside move gets shortened, right? So if I saw us push up immediately, then I would be thinking that the one we probably trade through that and we get the 1 2 to go higher. Then I would be looking at the three or the five as being more high probability. But once you start selling off, if we came back up, I would think that the one or the three would be higher probability that we get to sell off from. And then as far as the downside goes, now that we selling off already, I would actually look for the three versus the one to get the bounce from. Because if we already pushing down, there's a higher probability that we get the 1 2 move lower, right? The 1 2 move would happen, but it'll happen at a lower level versus it happening at a higher level, right? And since we are now selling off and we seeing that the one could be deeper, we can expect a lower high. And that's why we look for the two to happen somewhere here versus the two happening higher. Then our 2 3 goes deeper, right? And that's where you could say, okay, now that we've taken out this one and we've gone a lot deeper, then we could expect the bounce from the three to be a higher probability than the one. So now that we selling, this one becomes higher probability. This becomes the next, and this one becomes the least probable. In this case, now that we selling off, we get in the bounce. We already pretty much done the 0 1 already. So with that being said, then I'm thinking that we're not gonna get a real bounce at the one, and we actually retrace higher, then sell off lower, and probably get a bounce on the three. So that's where those probabilities are coming from and why those expectations are there, right? So I hope that makes sense. I hope that makes sense.
Yep.
So let me give you the chart for the rest of the week, and then I'm just gonna open it up for Q&A. Q&A, Q&A. What you guys got, man? I know y'all got something. How was the session today, you guys? You guys got got anything
Mine was,
value?
yeah,
You guys got it?
yeah, mindset was awesome.
Yeah,
Mm.
yeah.
Definitely need to work on that.
Come
Think like
on,
that. Yeah.
come on, and
Mm-hmm.
I ain't picking on y'all. I just see it in y'all. I know y'all got it, man.
Mm-hmm.
I know
Thank you. Thank
y'all
you
got
for
it.
believing in me.
I know y'all got this, man. So If no questions, man, I'm gonna go ahead and cue the music.
I'm
So,
done.
all right, guys, I'll catch y'all in the charts in the chat the rest of the week. Good luck. Remember, it's a holiday on Friday, so don't get on the charts, and if you do, get out and get it done. All right.
Thank you.
Peace
All
out.
right,
I'll
y'all have a
upload
good one.
his stuff as soon as I can tonight. Peace out.
All right.